Hello there, this is Misha again from Quickstart Forex. With another live trade setup video. I want to show three sort of setups that occurred and which some of them I didn't take for reasons I want to explain. A little bit of price action nuances, and I quickly want to explain the trade that I'm currently in. Let's just jump right to it. So this is British pound, Swiss franc, but first things first. So checking at the news for today, it is Tuesday, June 6th, and there was Australian interest rate statement, RBA rate statement, any rate statement. You want to stay out of that market. All right, so anything related to the Australian dollar or closely linked to it, you definitely want to stay out around this time. So I definitely didn't trade Australian dollar, US dollar, but we'll get to that in a bit. Otherwise, it is completely free of big news events today. So it's just a nice relaxed day of trading. So maybe liquidity could become a bit low. Sometimes when there are no news releases, then sort of price is just stuck at one space. But anyways, all right. So coming back to the chart, British pound, Swiss franc, we see we have a very nice downtrend, right? So it's up moves and down moves with lower highs and lower lows. And now we're getting to where price is trading at right now. So I just quickly want to explain something here for the newer people to Forex trading. So it isn't the most beautiful trend, but you can see the trend is making lower lows every time except here, and lower highs. There we go. All right, the lower highs one is definitely the easiest to see. So here with this sort of break here, it isn't a clean trend, right? And all I want to explain with this is that sometimes trends aren't as clear as in a textbook, right? But you can clearly see that after this little push up here, we broke down again. We came up to this previous support turning resistance, and we see this indecision candle. It's a bit more bearish than indecision, but it's alright. We can see what price wanted to do here, and it aligns very nicely with these previous swing points. So if we assume the normal trend continues, we get a retrace and we get another leg down. Okay, so that is sort of the plan. That is what we want to achieve here with this trade. I'm already live in this setup, but okay, this video might become a bit longer than I thought it would, but that's okay. Some very valuable information in this video, or going to be. Okay, so we have here the setup. It's a line with a trend, so that's already one plus point. It's a confluent plus point. Then we have a very nice trend line coming through here, touching these tops. I should be touching these two tops. It's okay. And okay, we should wait for till we get to the trend line. So we have breakthrough, support, come back with a retrace, and test for sellers. So we have a resistance area here, very clear with recent price action, and if we scroll down, we actually see that the support and resistance area has been there for quite some time. All right, quite cool to see that they do last and do often work again and again. Okay, so now back to this trend line. So we have this indecision candle here. Bulls tried to push up price but failed, and the bears brought price back down. So even if this doesn't touch the trend line completely, it is about the story of price, right? So what is happening here? We've got the bulls, we're sitting here on a support and resistance area. They're trying to get new high ground, probably even trying to break out of this trend so that either a ranging market consolidation or an uptrend later will, could happen, or that's what they're trying to fight for. But they just didn't manage, right? They tried to push through this trend line, push through the support and resistance area, and simply just didn't manage. Okay, all right. So then also, I don't use it a lot, but the 14 moving average, if you check the blog post about ultimate quick support and resistance placement guide, you will have seen there that I sometimes use the moving average, the 14 and the 50, as a dynamic support and resistance area. I mean, it's just clear to see like how nicely it works sometimes, how the 14 EMA hugs a trend line, and the 50 also. It's just a nice confluent point. I don't use that as the main thing, but it's nice as a confluent point. So we can see here even the EMA is tested and it retraced. So we've got a trend line, support and resistance area, and a dynamic support and resistance area, the moving average, and we're in line with sort of a trend, even though it is far in the low price action area, well, in this recent price area. The lower the price, the more are the chances that buyers are attracted. It just makes sense. Think of it as a sale. The currency is cheap, so people want to buy. So it is a bit more risky in that sense, but all the points align for me that this trend might just do another leg down. However, I am wary of the next swing low. Okay, and this is what I want to explain with this trade, and then we'll get to the actual trade here. So this swing low could always be the bottom of the trend, right? It could reverse earlier than that. I mean, it could just jump up here. But if looking at textbook trends, we normally see a double bottom or head and shoulders or a fake break, double bottom, fake break, and then we go up, or we start ranging here or whatever. But from the information that we have here, this is the lowest price has reached. So as soon as we go into lower territory, again, the principle that lower prices attract buyers, then it becomes more and more risky. So this is my support and resistance area, because that is just the recent lowest price, but also it aligns here quite nicely with older price action as well. So I'm happy with that area just for now. I'll probably delete it as soon as we get more information around this area. But as is, this is the support and resistance area. Now, if we look at this trade, so we've got an indecision candle here. I would wait for confirmation, so 5 to 10 pips below the low of this candle here. The low is 1.244 around 3. So I would wait until like 1.2437 or 36 to be broken, and then enter the trade, right? So let's say entry would have been here, 37. Stop loss is 5 to 10 pips above the high of this indecision candle. So the high is 1.2486. So let's say 1.2495. All right. To make it nice and round, or even here, there we go, 60 pips, 1.2497. Okay, so it's a bit more allowing for fake break. It's probably not a bad idea. So 60 pips times 1.5 is 90 pips. All right, so that would be my target. So 90 pips would be around here. Now, do you see that problem? We would have to break through a support and resistance area to get to 90 pips. So I would not take this trade. And this happened last night before going to bed. And I did not take this setup. I just didn't. Because it makes no sense. I'm not getting the target that I want to plan through logical sort of thinking of this setup. Okay, this is important. So don't just think, oh, so much confluence, oh, nice setup. You know what? I'll just do it in any way. If your plan says you need to have space for whatever target you want to reach, your trade needs to have space to reach that target, right? That's why you have a trading plan. So last night I saw the setup and I didn't enter. Well, I didn't put in an order. So this is now this morning. It's now the 6th of June. And I woke up to this. We broke for the entry that we would have had if we would have had enough space here. And we got a retracement, right? So technically this trade would have been entered if I had enough space to the downside, right? Because it was a legit setup. It was just the target. There was too little space before the next support and resistance area. But now, however, with the knowledge of or sort of luck, I guess, this is more of an advanced technique. With a retracement, I managed to enter the trade around, what was it? Let's just see, at 1.2455. So it's a very small position. I'm trading on my smaller account, but 1.2455. There we go. So I entered here. My stop loss would have been the same, 5 to 10 pips above this high. So again, that was 1.2486. So 1.2486. Let's just round it off nicely at 50 because it's higher than that. So 1.2505. Alright? So that's a bit high. As you can just see from price action, that's a bit high. So let's make it 1.25. I like that. Nice round number. It's a psychological area, also a psych level. The round numbers. So 46 pips. So 1.25 times that is, what is that? 28. No, wait. Whoa. 23. 23 plus 46 is 69. So let's say 70. So 70 target from there would be here. Alright, just in front of the support and resistance area, and that is okay. Alright, so that now for me the trade makes sense. Often if I enter a retrace, I still target my original take profit. So I can't remember the level it was at. I think it was 1.2355 around. So I would still have targeted, that was a bit lower, this, but in this case that makes no sense, right? So I'm going to target my current 1.5 RR and I will be very happy with that. One last thing to mention is another confluence point here. I forgot to mention that was a whoopsie daisy. What am I doing? Sorry. Was a fib retracement, and we can clearly see that in this fib zone, there we go. I'm just going to delete the zone. Who would have thought, right? In the trend, often 52.618 is a natural support resistance area. So that's why I took this trade, right? Like with a retrace, at least for now. We have a trend line confluing. We have a dynamic trend line, so the moving average is also lining up. We've got a nice support and resistance area. We've got the nice trend set up. And we've got now a fib zone also right nicely on the spot. So this trade is just, it's quite pretty. And especially now with the retrace entry, the target makes sense. And I can still get 1.5 times my risk. Alright, so I think that is, I'm going to call it quits with this video. I wanted to do some explanations on the British pound, Australian dollar, New Zealand dollar, US dollar, but I think I'll just rather record another video. I hope this helped. This is, real price action information and sort of analyzing the market and taking the information that you have and then trading on top of that. Also, quickly just to mention, my risk is exactly the same for this little small account as my other trades, even though the confluence points are so nice, because sometimes the trades just don't work out, right? This is a nice high probability trade, but there is still a chance it doesn't work out, and that's totally okay, right? That's totally fine. In the long run, I know my expectancy is positive, and I will come out with a profit if I stick to my trading plan. Alright, so that's it for today. I hope you enjoyed this video and hope you learned a lot. Leave any comments or questions in the comment section below, and I'll chat to you soon. All the best. Bye bye.